On today's episode, I want to take a quick look at two giant companies. That's going to be Disney and Apple. Both at some time today were down over 3%, and I think that's pretty insane for for companies at this size. Pretty much the whole market is down today, right? Dow is down 2.6%, Nasdaq is down 1.4%, and the S&P 500 is down 2.1% as I am recording this episode. If we take a quick look at the overall maps, almost every stock in every market is red. There are a few on the green right now, but like I mentioned, these two big players are down a nice amount. So in today's episode, I want to take a quick look at both these stocks. Recent news, earnings are coming up, so I want to see what investors should keep their eyes on for the next few weeks. So Disney right now, as I am recording this episode, is down about 3.87%. That's a crazy amount, almost 4% for the day. And this is not a small company, right? Disney has a market cap of $313 billion, and from its 52-week high closing, the stock is down about 14.6%. So it's definitely seen quite a correction. I would say we're going to take a quick look at technicals in a bit, but might be some buying opportunities for long-term investors. So the most recent news is Disney is kind of getting attacked by movie theaters, right? Last week, Disney released Black Widow on both movie theaters and their streaming Disney Plus platform. And it did really strong last week. This week, it didn't do that well. Movie theaters are saying that, hey, the main reason for it not doing well this week is because you released it on Disney Plus last week, and it made it a lot easy for other people to pirate it, to do password sharing, to do for you to miss out on a lot of revenue. I want to say maybe to some extent it is true, but I do believe movie theaters are a bit just angry right now. They're a bit salty right now because that Disney was able to do so well without them. Today's stock prices are down because the overall Delta variant, right? Fears of Delta variant. So we see a lot of airlines down, we see cruise lines down, and kind of anybody doing with the reopening play like Disney, right? A good portion of their revenue comes from parks, from cruises, and from a lot of outside entertainment, movie theaters. So with fear of another closing, what's happening again what's kind of being shared on the news again, it is bringing back fear to a company like Disney. So let's take a quick look at fundamentals of Disney, but before, let's take a quick listen to today's sponsor, a great reason why I'm able to provide so much content to you guys for free. I want to thank The Motley Fool for sponsoring this video. The Motley Fool is a company that provides investing insight and stock recommendations for investors of all skill sets and risk levels. You guys know I love finding new investing tools and resources to help me scout out new growth stocks. And right now I have a discount for one of my favorite services The Fool offers. Through the Motley Fool Stock Advisor services, you get access to ton of expert stock picks. Every month you'll get 2 new picks that are aimed at growing your wealth and to help you realize your financial goals. Stock Advisor's average stock picks have done amazing returns. If growing your money is something you like to do more of this year, you can visit fool.com/Jose Najarro or click on the link below for access to my special offer and decide if the Stock Advisor is right for you. Thanks again to the Motley Fool, and now onto today's video. So with Disney, you get a decent growth, right? They're expected to grow their revenue 12.7% on average for the next 3 to 5 years. They are positive in cash flow from operations. Unfortunately, they're not positive in earnings right now, in GAAP earnings, mainly due to COVID, right? COVID definitely affected this, but in the upcoming 12 months, they are expected to be positive in GAAP earnings. They also have, a decent balance sheet due to their fundamentals, right? They are a bit leveraged, but they have a lot of other assets, right? Like the parks, like rides, like cruises, and so much more. So right now, if we take a quick look at Disney technicals, I want to say this stock price is not overextended at all. So I do believe a good portion of the risk has been eliminated, especially after this drop right now. If I was a long-term investor looking to kind of increase my exposure or get some exposure, now would be the time I would be looking at Disney. Disney does report earnings on on August 12th for quarter 3 of 2021. So about 3 weeks from now, 3 to 4 weeks from now, I want to say investors should be keeping out for the following things in earnings. First, sub growth on their Disney Plus. Right now that things are opening back up, is there going to be a decline in growth? There's going to be a slowness in growth. The second thing is how their reopening businesses are doing. Are parks doing well? Are movie theaters going well? Are their cruise lines expected to start anytime soon? And how are they doing? And finally, future plans for upcoming releases. Are they going to just be doing a mixture of both Disney Plus and movie theaters? Are they going to move away from Disney Plus, even though it did really well for them? What are they going to do for the upcoming releases? All right, so the second stock we want to take a quick look at is Apple. As I am recording this episode, the stock is down 2.9%, almost 3%. This is the largest company down 3% in one day. That's pretty insane. One of the most recent news is Apple. There was a cybersecurity research that mentioned that Apple had some security problems they need to kind of handle as soon as possible. I do want to say this is a lot of headlines. I want to compare to what the news is. Obviously, it sucks, but it does seem like this cybersecurity issue that they're talking about affects all different types of phones. So that plus the overall market being down right now is kind of bringing the stock price down. Apple's earnings are expected next Tuesday, scheduled for July 27th of 2021. When you invest in Apple, what do you get? You expect a company that's growing 4.5. So not a heavy growth company. They are positive in earnings, positive in cash flow, so strong fundamentals. If you take a quick look at their balance sheet, again, they are a bit leveraged, but with a company with this type of balance sheet, it's okay for them to be leveraged with cash compared to debt. They also pay somewhat of a dividend. If we take a look at their technicals, I would say the stock right now is a bit overextended, so there is the risk, not a guaranteed, the risk of the stock pulling back a little bit more. All right, so now let's take a quick look at what investors should keep an eye out. Apple earnings are coming out first next week, right? Next Tuesday. First, how our iPhone sales are doing this quarter, how they expect it to do in the upcoming quarters. We saw last week that there were reports that Apple is talking to their production chain to ramp up that production line. So hopefully they mention something during the earnings call. Next, future guidance. The final thing that I don't think is a huge thing, and I don't think due to legal reasons they can mention any information, but any updates on their legal fights with Epic Games and the overall fight that, hey, 30% them charging for the Apple Store is way too much. And again, I don't think there's going to be much information on that because the legal fight is still happening, but it might be something interesting if they do mention it. So I hope you guys enjoyed today's episode. Like always, subscribe, hit the thumbs up, and see you next time.